Hello guys, welcome back to another live trading video. So today we got our entry in Coal India. So our entry was at 228.90. This candle was our entry. So we kept our stop loss a little bit above the day's high. 228.95 is our stop loss, and our target is as usual 1:2 is what we are aiming for our target. So I'll explain what's the reason behind this entry, what's the reason behind the stop loss and target, everything in detail once the trade ends. So stay tuned guys, let's see how the trade goes. So guys, we have closed our half portion at 226.75. This candle is where our half portions have been exited in this candle. The reason is because it's today's low. Once the market opened, this is where the day's low is, and it made quite a bullish move. It's not very strong, but just to be safe, we exited here our half portion, and the rest of portions are kept at the previous day's low. So let's see what happens. So guys, the market has been closed. Time is 6:40 p.m. right now. Actually, I went outside once our off positions were filled in this region. 226.75 is where our first off positions were filled. After that, what we did was trailed our stop loss to 228, and you can clearly see 228 has been hit. So our rest half of the positions were filled with a small profit. Actually, 228.10 is where our entry was, 228 is where our trail stop loss was. So it was filled and we closed with a small profit for today. We didn't take any more trades because, as I already said, I went outside after our first half positions were filled. So now I'll explain what was the reason behind this entry and everything in detail. So let me go to the 4-hour time frame. So when you look at the 4-hour time frame, it indicates a small downtrend in this region. So we made use of this opportunity and we were looking for selling opportunities. So how can we say it is a downtrend? In the recent times, you can clearly see a upward move, and here we can see the change of character. What is a change of character? It is definitely a break of structure, but change of character is what we say when there is a change in trend. So when there is a change in trend, we look for the opposite direction for our entry. That is, in this case, we have upward movement here. We were looking for buying opportunities, and once there is a change of character, we started looking for selling opportunities. I have mentioned this in every one of my live trading videos. If you haven't checked out our other live trading videos, I'll give the card here. You can definitely check it out. You might have already heard other traders saying trend is your friend. Yeah, that is actually true. While taking your positions on the direction of the overall market, you have a higher probability of success. So that is why we'll have to take positions based on the overall market structure. In this case, since this is an intraday positions, I was looking for 4-hour trend. If you are looking for swing positions, you couldn't base your trend based on the 4-hour market structure. You should be looking at the monthly and weekly time frames to understand the overall market structure while you are looking for swing opportunities. So in this case, we are looking for intraday position in which we'll just exit in a small move. That is 0.5%, 1% move will be enough for our intraday positions, right? So what we did, I'll just zoom in here. So in this region, we can see a break of structure in the 4-hour time frame. So what happens when a break of structure has occurred? We'll look for order blocks, and that is what our point of interest will be. And we'll be looking for entry opportunities once the price beats our point of interest. So what we did, we went to the 1-hour time frame and marked the order block. So which can be considered as our order block. This candle can be considered as our order block zone in the 1-hour time frame. Then we went to the 1-minute time frame here, and we were looking for confirmation of this zone, and we entered our position. So what happened today? As you can see here, price made a small up move, made a pullback, then again a small up move, again a small pullback. So this is also considered as a small pullback in the lower time frame. Actually, it is in a very much lower time frame, that is 1 minute. But if you look at the 15 seconds candle or 30 seconds candle, it can be considered as a pullback, and there is a break of structure in this region. So if this region is considered as our pullback, this will be our change of character. This region can be considered as our change of character. So what we did, we draw the 1 minute order block in this region. So this can be considered as our 1 minute order block. Based on this candle, that is 228.10 was our entry, and we kept our stop loss a little above the day's high. You could have also kept your stop loss in this region. 228.55 could have also been a good stop loss, but I thought keeping our stop loss above the day's high is pretty much conservative than keeping it in this region, because when you look at the stop loss, it was just 0.37%. So I thought it would be a pretty small and safe stop loss from my perspective. That is why I kept it here. And some people who have been trading with SMC might keep their stop loss a little above the order block. I personally think there are a lot of times price moves a little bit above the order block and makes the move towards our target, especially in 1 minute time frame, because 1 minute is pretty volatile. There might be some drastic moves, so it is necessary to have a conservative stop loss. So what happened today? The price gave our entry, it moved and touched our first target, which was at 226.75. Then you already know it went and hit our break-even point. 228 is where we trailed our stop loss. It hit our stop loss for the next half of our positions. So today we closed the trade with a small profit. I would say this was a pretty good trade. Everything went according to the plan. The main reason I exited half of our positions in this region, 226.75, is because this move from here was pretty strong, and this zone completely is an important zone in the higher time frame, that is in weekly time frame. So I thought it is safer to exit in this region rather than waiting for our 1:2 risk reward ratio. So actually keeping a 1:2 risk reward ratio is important, but that doesn't mean you shouldn't keep in account of your support and resistance levels. You should always keep your stop loss based on your support and resistance levels, but at the same time see to that your target at the resistance level gives at least the 1:1.5 or 1:2 risk reward ratio, so that it could give you a better risk reward ratio, which means better risk management. So that's it for today's video. Hope you are able to learn a couple of new things from this video. Thank you so much for watching. Make sure to like, comment, share and subscribe. See you in the next video. Bye bye.